Welcome to Good for Bitcoin, a weekly show recorded live every Friday, where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Content shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
Well, hello, everybody, and welcome to Good for Bitcoin. We are excited to be back. We took last week off. Kate was on a little vacation. As you can see, she is still kind of enjoying that. Looks very nice.
Yeah, this is not a fake background. Still kind of on vacation, but like working from here, it's been fun. So Costa Rica is beautiful.
Yeah. I wasn't sure if you wanted to say like where you were, but yeah,
I won't give the town. Costa Rica is a very big place, so I won't
It's true.
reveal my location, but very tropical, yes.
Yeah, it looks nice. I'm still at home, just holding it down. But man, a lot has happened in the past couple of weeks. We, like I said, we didn't do the show last week, so we do have a lot to catch up on. I also kind of want to just like the vibe of the show. I think like I'm vibing with like the slowness of like being on vacation, and like we don't need to like rush through things today. Like we can just chill and just like analyze, all the things.
Keep it chill.
Yeah.
I like it. Cool.
First, we of course have to start with public company news. Strategy did not buy any Bitcoin last week, but they did buy some Bitcoin this week. They bought 535 BTC. They now hold 818,869 Bitcoin. And they have also been talking about the possibility of selling some of that Bitcoin, which has caused a lot of panic over the past couple of weeks. I saw this video where Saylor positioned it as a real estate company, as them being like a real estate company. And he was saying, because their cost basis is so low for some of the Bitcoin that they've originally bought. So he was saying, like, if you bought a piece of property for $10,000 and then it got much more valuable and you sold it for $100,000 and you then used those profits to like buy more property or reinvest it in other means, like to pay down debt or to buy back shares or, do other things. Most people would consider that pretty rational, but it's just like going against, like, Saylor has tweeted many times in the past, like, never sell your Bitcoin. And now he's like tweeting something else, like maybe sell your Bitcoin. I don't know. So yeah, people are a little bit mad, I think, that they're maybe changing their strategy a little bit there, but I don't know. The market hasn't seemed to react to it too much. Like Bitcoin seems to be like up a little bit, or at least just continuing to be like flat, and they bought more this week, so they haven't sold yet.
I mean, I don't think you can say that like Saylor and Strategy is not bullish on Bitcoin by like floating this idea. And it does seem like they're doing this to pay out dividends for STRC. I think that was maybe the rationale behind it. But I mean, not gonna lie, when I first started buying Bitcoin, like that was my strategy. I was like, well, when it goes up, I'll sell a little bit, reinvest it. And I don't think I've actually done that, but like that was my initial thought process.
Yeah.
And I will say, I have been on Reddit many times asking, is it bad if I sell my Bitcoin for X reason, for this reason? And everyone in the comments is always like, you gotta live your life. This is what Bitcoin is for. Like, I don't know. I don't think it makes you weak hands by selling it if you need it.
I think that's very valid. I've seen a lot of folks also. I'll give a shout out to Brett or Eli Herf, our friend that was at Gamma. And he is always, anytime people are saying like, never sell your Bitcoin, I always feel like he's in there saying like, that's a very privileged position to have, actually.
Yeah.
Because in some cases you might need to sell your Bitcoin, especially if you are a long time holder. And of course there's like ways that you can take out loans and stuff if you don't want to sell your Bitcoin. Like there are some alternatives, but yeah, live your life. Go to Costa Rica, Sell some Bitcoin. Do it.
I'm never coming back. Well, speaking of selling, we have Mara. They revealed that they sold 3,386 BTC this past quarter. And we have a little segment on mining later, but they are continuing to bleed for sure.
Yeah. Yeah, I can't remember who it was. I don't think they were from Mara, but it was like somebody that had like a really big position in Mara. I was listening to like a podcast and this person was getting interviewed. And I guess, it makes sense, kind of just going back to strategy. Like it makes sense, especially if you're a Bitcoin miner, if, the price of Bitcoin is going up and you're projecting the price of Bitcoin to go up, it maybe makes sense to hold your Bitcoin and then sell it later versus obviously you don't want to sell your Bitcoin at a loss, which it seems like a lot of them are selling at a loss. But in any case, it makes sense. If Bitcoin is down, if you expect it to like continue to kind of be flat for a while, to maybe sell your Bitcoin and offload some of that risk, especially if you're a miner and margins are like razor tight anyway. But yeah, Bitcoin miners are just not having a great time in the market right now. But yeah, we're going to talk a little bit more about that later. Block, we're also in like earnings season, so a lot of these companies are announcing stuff as part of like their quarterly reports. So Block revealed an additional 34 BTC on their balance sheet, so they now hold 9,032 Bitcoin.
Nice. And then we have Orange BTC. I think that's how you pronounce it. They are a Brazilian.
Orange or something. I don't know.
Orange. They're a Brazilian Bitcoin treasury company and the largest in Latin America. They bought 5 Bitcoin this week, and so they now hold 3,732.
Love it. A Smarter Web company. They bought 25 Bitcoin. They now hold 2,830.
And then we have Keel Infrastructure Corp. They were previously known as Bitfarms, a huge mining company. Revealed that they have 409 more Bitcoin in their quarterly filings this week, and they now hold 2,469. So this is part of their rebrand to Bitfarms. They had also announced that they had re-domiciled from Canada to the US. They were based in Quebec, and I'm not
they're in
actually
New York
sure
now.
what. Yeah, was it poly related? I'm honestly not sure why they moved. But
yeah, I'm not really sure. I saw that in the news. I saw like this Keel Infrastructure Corp, and I was like, what is this company that has like thousands of Bitcoin? And then I saw that it was Bitfarms. But yeah, they rebranded to Keel. I would imagine that it's like an AI thing.
That's
like all these companies are pivoting to AI. And yeah, Keel Infrastructure Corp certainly sounds less Bitcoiny than Bitfarms.
I like Bitfarms better.
Me too. Yeah. Yeah, Keel Infrastructure sounds like, isn't keel like a boating term, like the keel of like a ship or something?
I don't know actually.
You make infrastructure for boats, not, I don't know.
Maybe they're pivoting for real.
It's a hard pivot. Yeah. Last we have Fold, who in their earnings report this week revealed they sold 1 BTC. Why?
Shame.
Like just 1 Bitcoin. Why did you not just hold it? They now hold 826 Bitcoin.
Company retreat, baby.
Yeah, there you go. They went to Costa Rica.
One that I thought was interesting, it's not a direct Bitcoin buy, but Trump had to file his Q1 buys, and he bought Coinbase, Mara, and Strategy, MSTR shares. Yeah. So, pretty cool.
Interesting. Like that's at Trump, actually? Like not it's the like Trump company?
And I think it's a combination of Trump and his family office dwellings.
Okay.
Yeah.
It's pretty cool.
The Strive rebranded today as the Daily Dividend Company, and they're now offering daily cash dividends on their Bitcoin-backed SATA preferred stock, which currently offers 13% APY.
Of course, my internet would go out for like a second.
So funny. Well, I finished what you were saying.
Thank you. Thank you for picking up the
welcome.
slack. We have, I feel like I've mentioned this on the show before, but we have the same neighbor trimming trees again. So they're making a lot of noise, and I don't know if they're like kicking the power lines or something and causing issues maybe.
That's so funny.
Yeah, so that's with Strive, I guess. So yeah, let's get into the news. I feel like the theme of this week is a lot of things launched this week that have been in the works for a really long time. So like today was like launch week for everybody, which is cool. So I guess we'll start with the first thing, which is
Most exciting.
I launched a company, a product, a new thing
Yeah.
called Vibe Watch. And I guess I'm going to share my screen and I can give like a quick overview.
Please.
So, I've been in the crypto social media community management kind of space for over 5 years now, which is pretty crazy. And I've, through that time used kind of the whole gamut of all these different social media management tools. I've used, the native platforms. I've used Sprinkler, Sprout, Brandwatch, like all these different ones that promise to, give you like, surface all of your community, across all these different platforms in one spot and have like that unified inbox and give you like really smart listening features and try to like surface, what your community is saying and all this stuff. And, some of these tools are like $100 a month. Some of these tools are like thousands of dollars a month and they're like huge enterprise softwares. And there's always been, no matter what, like all these different tools that I've used, I feel like I've used all of the main ones. They all have this problem, which is that they're not actually very smart and they don't actually understand your community at all. And they certainly don't understand like why something is well received or not well received. Like, why is your sentiment going up? Why is your sentiment going down? How is your sentiment actually measured? And just like none of it is very smart. Like they'll market themselves as like, oh, we give you like these actionable insights, and then those actionable insights is just like a word cloud that is like whatever like the community said when they were like engaging with you on X. So I kind of got sick of looking for like a tool that would do this, and I was like, I am just going to build this myself. So I've been building this for over half of a year now, which is crazy. Kind of slowly iterating on it. And a few months ago, I was building this initially just internally for myself. And a few months ago, I was like, I feel like this tool doesn't exist in the wild. And I feel like a lot of people could get a lot of use out of something like this. So I built this tool called Vibe Watch. And basically what it does is actually give you relevant insights into what your community is saying. It understands what your community is. It understands what your brand is. For me, I know that I've talked to you a lot about this, like context is everything in marketing. And it's also everything in these types of tools. Like not having context for what your community is. We can take, Stacks as an example, right? Stacks has, the token Stacks is STX. STX also just so happens to be the ticker for Seagate's stock. So if you're just trying to search like, what is like the sentiment on like STX, you're going to get all this other irrelevant stuff, related to like Seagate, because it doesn't know the difference between STX Stacks and STX Seagate.
Yep.
It also, all these tools, maybe they only work with X. They don't work with all these other platforms that are out there. I can go to like the homepage here and we can see like we support all these platforms, Discord and Telegram, and like your community is everywhere, right? It's everywhere. It's across all these different places. There is no tool out there other than Vibe Watch that supports all of these things. A lot of them support a few, but like certainly not all of them. I just rolled out Nostr support today, which we haven't announced yet. So that's the announcement on the show, is that Nostr is on here now after we got a request for it. But you have all of these platforms that are all in just one view in Vibe Watch. And basically the goal is to have insights from all of this data that's coming in, right? You can see daily insights, almost hourly insights on, what's happening in your community, now on Nostr. And it also generates these weekly reports that are relevant for your entire community. So another thing that I got really sick of with all of these different tools is, even for these huge enterprise tools that were literally like tens of thousands of dollars annually, even when I was using those types of tools in previous companies, I was still having to create manual reports of like, and trying to like piece together like, oh, you know, we posted this thing and the community talked about it here. And, you know, I was still like trying to map all these things manually myself. And now you have these like reports that can get generated weekly. It drops into either your email or Notion or Slack, and it's all automated. And the goal is that these reports are like actually useful. It gives you like a TLDR on what's going on in your community. And they're actually relevant for everybody in your organization, not just, you know, you as like the community manager or the social media manager. So if there's something that's relevant to like your product team or your engineering team or your, you know, sales team or whatever, like it's going to put those things in and tag them as relevant. And it's just like one kind of weekly pulse, weekly report that is relevant to your entire org. So it's not just useful for community managers, it's useful for everybody. It's also, we have support for all these things. Also being, you know, coming from the crypto space and not wanting to connect, you know, as many things as possible to, you know, to these different platforms. Like if for X, for example, right? If I want to add my X account, all I have to do is type in like, what is my handle? I'm not authenticating, you know, anything. Like VibeWatch has zero permissions to, you know, message any of these platforms. Like it's strictly like read only. And that like that is also like very important to me, is like the security side of things. So we launched this week. I'm super excited about it. For anybody that wants to join, I think you can use the code VIBES and get 50% off your first month. But your first week is free. So if you are, you know, representing a community of any kind, you know, which is pretty much everybody, right? Every brand has a social account. This, I think, is useful to you. And it's also not just like useful for crypto companies. It's like, it's useful for everybody. So I'm super excited about it. Yeah. Vibewatch.io. Go watch your community vibe, I guess.
Oh,
is
I love it.
The takeaway.
I'm so proud of you for launching this. Like, and seeing your V1 to what this is now is insane.
Gosh. Yeah,
like,
right.
This is like a legit tool. And I'm definitely going to use it. I was just obviously on vacation and I came back to like a million things, but I'm pumped about this. And like, honestly, when we launched, like one thing that we'll get into now is the white paper after this, but immediately people are like, what's the sentiment? Like, what are people saying? And I'm like combing through the comments to be like, well, I see like 10 good comments and I see like one question. Like, it's so manual and it's so frustrating. And even when we were at Leather, we had this problem trying to like separate Leather wallet from like
right. Leather's another
Leather Festival
amazing example. Yes.
And one, I think it was in your, I don't know if it's a blog post or like your intro post, but it was so important, is when you basically say like other tools, they pick up on like, I think the example is you say like, yes, I couldn't agree more. And it's like that most tools pick that up as positive, but your tool can like decipher, well, like, no, he's agreeing with like a negative comment or like criticism or feedback. And like, that is just, it's really cool. So you can tell that like, sorry, go ahead.
I was just going to say demo.vibewatch.io if you want to check out what the interface looks like for yourself. But yeah, actually, I'm working on a expanded blog post that expands on that exact thing about like context. And yeah, there's like 5 different things that like VibeWatch puts into context when it's like scoring every single message that's coming in. It's, you know, one, it's scoring one based on sentiment, and 2 based on like relevance and how relevant it is to your organization. So the first thing that happens when you set up an account is you're typing in like your brand or your company's website, and it's like figuring out like, what is your brand, what is your company, what does it do? And every single time that it's scoring a message, it's contextualizing that back to, you know, what is your actual brand. to know if it's relevant or not.
Yeah.
And there's a lot of things that you can do. Like you can go in, you can drill down to like each message. If you need to like correct something as on topic or off topic, you can do that. Or, you know, if something is scored as positive and it's like incorrectly scored and you need to actually, oh no, that's actually negative, you can correct these things. And VibeWatch learns over time. So if you're making corrections, it's learning, it's adjusting, it's adapting based on what your community is saying. And yeah, if you are, if there's a message that says like, yes, I couldn't agree more, VibeWatch is looking at whatever is being replied to, right? And it's
the context.
If the parent message is negative, then the yes, I couldn't agree more is a negative comment, even though, you know, a traditional tool would maybe say that it was positive. So there's all these different things that are making it very, very accurate to you, like specifically to you and your organization. So none of these other tools are doing this. I'm super pumped about it. And we've already had a lot of trials this week, which I'm super excited about.
Yes.
And go check it out,
That's awesome.
everybody. Thank you.
I love that you don't have to like authenticate and give permissions. That's like so important. And I just like, you can tell that this was built by someone who has felt every pain point of being in this position. So I'm hyped about this. I think this is so cool.
Yeah. Yay. Yeah.
All right. Well,
a lot of news on your end too. A lot of things that the Stacks ecosystem has been cooking. A lot of things that I've been aware of for a long time. You know, these things have been going on for maybe like 5 months now. That you know.
Yeah. This kind of idea, because it's a big idea, right? Like it takes a lot of time to build together.
Yeah.
Yeah. Obviously, like we were still working together when a lot of this was happening, but this week we launched the Bitcoin staking white paper. So this is really just like a proposal to Stacks' consensus mechanism. Right now, you can lock your stacks and earn Bitcoin. You can dual stack and earn Bitcoin, but this is like the omega. It's like you lock your Bitcoin on Bitcoin L1, you keep your keys, you keep your custody, and you're able to earn Bitcoin yield. So right now you're showing the Bitcoin Staking Resources Hub. This is something that I've been working on. You probably helped me with this, honestly.
Yeah.
And it's just like a lot of information and context as to like what we're trying to build and, you know, what we want Stacks' vision future to be. And so this is like a great resource to learn about the white paper and what Bitcoin staking is actually proposing, what we're trying to do. Just get more information. So there's a lot of great content and just information if you want to like learn more about this.
Yeah.
But maybe let's pull up the white paper post, because there's a really good graphic in there that I think really helps people understand like what Bitcoin staking looks like. If you scroll down to how it works, I think this is a great visual to really understand. So basically there's kind of like a couple components to this. You need both BTC and STX to really like take the most advantage of Bitcoin staking. So you have to think of STX as like your capacity asset. So when I've heard other people describe this, you know, like you have to buy Bitcoin mining equipment in order to mine Bitcoin. Well, you have to hold STX in order to earn yield on your Bitcoin. That's sort of like a really good analogy that helps understand. So you lock them together. It's a 6-month bonding period where they're both locked, and at that point like you're earning yield on whatever amount of Bitcoin you have staked. But again, you lock it on Bitcoin L1, you hold the keys, you're not bridging it, you're not wrapping it, you're not transferring custody to anybody. And I think one of the most important things is that you can take your Bitcoin out at any point in time, and it basically just gets released to you in the next Bitcoin block, which I think is a very underestimated feature. Because some of the sentiment and comments I've seen around this in the release is like, well, 6 months is a long time to like not have access to your Bitcoin. And that's just not the case. Like you can unlock it at any point. You just forego the yield for the rest of the 6 months. But your stacks does still stay locked. That's like sort of like the only caveat. But I think most people are more concerned about their Bitcoin than their STX anyway.
Yeah.
So that's a cool one. And I think the target yield is around 3%. It's not guaranteed because it's determined by an algorithm, but I think this is like a really steady, sustainable yield that's being offered. And at the end of the 6-month period, your Bitcoin unlocks, your stacks unlocks, and if you're up for it again, you repeat the cycle, and that's how it goes.
Yeah,
So.
I have a lot of thoughts about this. I've had a lot of thoughts about this for a while, and I've kind of talked about it somewhat.
Yeah.
But yeah, it's really cool to like have this actually be out so we can, I guess, more officially talk about it.
Yeah.
Now that the white paper is live. Just to take like a step back, like Stacks has had proof of transfer for years. The mechanism, how that works is you, as a Stacks user, you lock up STX, and for doing that, you earn a BTC, and you've had the ability to do that for years. I think since like 2021, since Stacks 2.0 launched. So that mechanism has existed. Where is the yield coming from? That yield is coming from Stacks miners. Stacks miners, in order to have the opportunity to mine Stacks blocks, they are bidding Bitcoin native Bitcoin for the opportunity to do that. And then that Bitcoin is basically passed along to stackers who are stacking their STX. So that's like how that relationship works. Like that's where the yield is coming from. And then over a year ago, Bitcoin's dual stacking, not over a year ago.
It was
a little
like
less than maybe a year. Yeah. Anyway, maybe let's say like 8 months ago or something like that. Stacks launched this new product called dual stacking. And what that basically allowed you to do was you would be able to bridge your Bitcoin into Stacks, and it would become SBTC. And you would pair up, your SBTC with Stacks together, and basically you would be able to earn more by like pairing them up together. And that yield was still being powered by the stacking mechanism, by proof of transfer, but it was sort of like being subsidized in a way, because there was like certain Stacks entities that were basically passing along the rewards that they would have earned, and they were just passing it along to this program, to kind of just incentivize it. And that was sort of like a test for this dual stacking sort of test for this, which is like native Bitcoin staking, excuse me. That was also one thing that is going to take a while to like go between like Bitcoin stacking and Bitcoin staking.
I know.
So this is a new program. As I understand it, dual stacking is going to be phased out as part of this, as long as the governance proposals go through and everything like that. And it's going to be replaced by this new program. But I think that the main thing is like when dual stacking launched, there was initially a lot of expectation about this is going to bring in a ton of people are going to bridge their Bitcoin in as SBTC, and they're going to participate in this program. And like that wasn't really what happened. Like there certainly was some excitement for it, but there's still so much risk involved, especially if you're an institution. Maybe you're acting as a fiduciary. Let's say you have 1,000 Bitcoin, right? And you have millions of dollars of Bitcoin. The proposition of bridging all of your Bitcoin into a network like Stacks, compared to leaving it on the L1 where it's very, 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 very safe, it's just too much to ask for a lot of these institutions and a lot of these fiduciaries and a lot of, just a lot of these companies. So it just wasn't something that gained a lot of traction. But if you had the ability to instead keep your Bitcoin on the L1, and you're still interacting with Stacks, you still have the STX token, so you're still going to see demand for STX with this mechanism, but you're keeping your Bitcoin on the L1 is, I think, much more palatable for institutions and even retail users, right? For regular users. Like I, have a majority of my Bitcoin on the L1 still, right? And I don't want to have to bridge all my Bitcoin in as SBTC. I like the security and the safety of having it on the L1.
Yep.
So the fact that I can continue to do that, stays on the L1. It just uses like really simple time locks that Bitcoin L1 has supported for years.
Yep.
It's just so much safer, right? That it's basically turning it from, you have to worry about like bridge risk plus, you know, STX price volatility risk, to just STX price volatility risk, which is just like much easier for institutions to, you know, to predict and to, you know, have risk profiles for, versus like losing it all in some like crazy bridge hack. So
I agree.
I think it's very exciting. I think that it is going to create a ton of demand. I'm going to put, you know, a bunch in once it's available. Excuse me.
Whale alert.
So yeah, maybe not quite, but yeah, I'm super excited for it. Very excited that it's finally live, or not live, but announced, and we'll be going live soon. And I think all that's left is, I think Stacks was like looking for like a big partner to launch it with. We saw a post from Manib, I think a couple weeks ago. He was like soliciting some big names to, you know, come in and try it out. So yeah, that's you know, kind of one of the final steps is to you know, get a big name that's willing to willing to do it. But yeah, you can see this chart here. And there's some other chains that have tried to do this, but they haven't done it as comprehensively, I think, as Stacks is wanting to do it. I think Babylon would be like the main example that a lot of people would point to. But for Babylon, the rewards that you were receiving were not in native Bitcoin. They were in like the baby token. So there was no incentive to hold the baby token. You were just like immediately going to, you know, earn it and then dump it. Yeah. Right. And the baby token has just like gone to zero, or like close to zero when you look at the charts. So, so yeah, like you said, right, a 6 month holding period for STX for this is very different, you know, compared to like an immediate sort of dump as soon as you get the rewards. So, and no slashing is another really, really huge one. Like your Bitcoin truly is remaining your Bitcoin. If you're putting one Bitcoin in, you are getting one Bitcoin out. It's not getting slashed or like converted in some weird way. Like it's staying Bitcoin. Yeah. And that's huge. Huge. And also no like like weird tax things too. Like some people think bridging is like a taxable event. Some people don't. Yep. There's not like a very strict like clarity on it. So also not having to worry about that, like your Bitcoin staying on the L1, super powerful. So yeah, very exciting. Pretty awesome. Yeah. I feel like the biggest one, I mean, it's not the biggest criticism, but one of the things that I've heard is, you know, the APY is averaging around 3%. But again, like it's built in such a way that like all of the trade-offs that you would have as a Bitcoiner, like they're accounted for, right? Like it is fully self-custodial. It is like you can exit at any time. The yield is in Bitcoin. There's no slashing. Like all of these things, it's like I mean, at the end of the day, I'm not going to go somewhere where I have to transfer custody to earn 10%. So I'm earning 0%. I mean, 3% is better than zero, right? That's so like, that's exactly. Kind of, that's the alternative is 0%. Yeah. Which is fine, right? If you want to, I will certainly be participating in this. I'm probably not going to do 100% of my Bitcoin, just because us Bitcoiners, you know, are very risk averse with anything. Very, yeah. But you know, certainly a percentage will be going in there for sure. All right. What else do we got? This one's crazy. Wow. You got to go on to this one. Yeah, this one got pretty blown up. Yeah, gosh, I'm looking at over 16.6 million views on this post. Basically, this guy, I don't know his actual name, but his X handle is CPRKRN. He posted this thing on the other day about, oh my God, Claude just cracked my Bitcoin password. And he was saying that he was going to name his kid after Dario, who's the Anthropic CEO. But let's kind of explain what happened here, because there was a lot of people that were saying like, oh, did Claude, crack a Bitcoin wallet? Is it so over, right? Is Claude gonna like hack into Bitcoin? So it's not exactly what happened, but let's kind of set the stage. So this guy, CPR KRN, he got locked out of his blockchain.com wallet over 11 years ago. For those that don't know, blockchain.com, they're a self-custodial wallet. They use a private key plus a password to secure your seed phrase. So you need both in order to unlock your wallet and move funds around. So at its height back in the day, that address contained over 10 BTC, but it had about 5 BTC sitting dormant since 2015 when he got locked out. And he basically, I think he said in one of his posts that he got high and changed his password. And then he like forgot what he had changed it to. So he didn't, he forgot, like basically your private key is like decrypted from this password. So it's like you have the private key, but the private key is encrypted and it needs to be decrypted with this password. And that's like how you would, unlock it. So he used Claude Code and he fed it a bunch of clues, and then Claude figured out how to decrypt it from all these like clues that he fed it. He first tried to brute force it. He tested about 3.4 trillion passwords. I guess he rented some, crazy like GPU network cloud thing to try to like crack it, and that didn't work. But then he ended up finding these 2 legacy mnemonics in an old college notebook, and he took that. He also gave Claude a dump like of his old computer, so it had like all of his files from his computer, and Claude ended up finding these 2 old wallet files and matched that up with the legacy mnemonic phrase, and then that allowed him to like decrypt the wallet and like get it. So Claude didn't actually like crack the password. It didn't crack Bitcoin, but it sort of just like helped him to like connect the dots and figure it out. And he said like he would have never been able to like figure it out on his own.
Yeah.
So
that's insane.
So he was able to get access to it, and he moved it, and pretty cool stuff.
Wow.
I couldn't imagine, like being locked out of your Bitcoin for 11 years.
That feeling would be
forced
insane.
Diamond hands.
It just goes to show you, don't throw out your old notebooks. That's crazy. Because I don't think that would, like, it wouldn't have connected it if you didn't keep the notebook. Crazy.
Yeah, I think you're right. Yeah, that was really crucial, because he needed both of those things.
Claude W.
Yeah.
Okay, well, I mentioned that we would talk a little bit about Bitcoin mining, just because I've seen some headlines suggesting that Bitcoin mining is pretty brutal right now. That a lot of miners are bleeding. So I think I read somewhere in CoinShares it said up to 20% of miners are running unprofitable. I would imagine maybe even higher than that, but the hash price is around $38 per petahash per second per day, which is basically break even for mid-gen rigs. We talked about Mara's losing over $1 billion in Q1. Keel had $145 million loss. Some pretty big numbers, and those are like the big pools. And the reason a lot of this is happening seems to just be, firstly, block rewards got cut in half last year. So miners now earn fewer Bitcoin per block they mine. And so, the price of Bitcoin needs to rise faster than the difficulty adjustment just to break even. But difficulty keeps climbing. It's now, on May 15th, it bumped up to like 135.64. Is it terahash? Is that what the T
Sounds
is?
right, yeah.
Yeah, okay. So it's just a lot more competition for, a smaller prize reward. So
yeah, and we're like a little bit halfway into the next halving too.
Yeah.
So those rewards in 2 years are gonna be halved. So then it's gonna be even worse.
So it's just like goes to show you that like the price of Bitcoin going up does not mean that like miners are doing well. And just like the overall economics of mining is just a tough situation at the moment. But I did find this cool story. I thought this one, it's not really great for price for like or economics for miners, but it is like a decentralization for Bitcoin win. So basically, 7 of the biggest mining pools agreed to come together under this working group called Stratum V2 and basically give up a power that allows them to decide which transactions get included in the block, and instead remove that power from the pools and give it to the miners themselves. So Stratum V2 is a working group. I think there's 7 pools that account for 75% of the global hash rate. So there's some big ones in there: Foundry, Antpool, Mara, Block. And they haven't actually moved over yet, but they're just like committing to like joining this group. And Stratum V2 is this new protocol. Well, actually it's been around since 2022, but it's this protocol that, yeah, again, hands the block building power back to individual miners instead of pools. So I thought maybe I'd give you like a little quick primer on how mining works today. Right now, miners around the world, they plug their hardware into pools. And so it's just much easier for payouts when they join a pool instead of doing it on their own. And they just have more power when they join, or not more power, but more chances to earn. It's like a more steady stream of income when they're in a pool.
Yeah, it's sort of like instead of getting like maybe a block every 2 years or something.
Yes.
You're getting it every maybe week, but
Yeah.
you're getting like a percentage of that block. But it's
Exactly.
like more consistent, smaller chunks over time.
Yeah. So what this means though is that like pools really like build the blocks themselves, and miners are just like, running the math, doing what we call solving the really hard math. But what this means is like there's like 5 or 6 companies that are deciding like which transactions actually make it into Bitcoin and which ones don't. And, that sounds a lot like centralization and like a very big point of pressure that I don't necessarily think it's been a problem, but like technically, if like a government wanted to really lean into one of these pools or maybe like covert it somehow, miners would have no idea that like pools were excluding transactions. So yeah, Stratum V2, it basically just gives individual miners the power to like build their own blocks, power to like pick transactions which gets included, and pools would still exist, but they would just handle the payouts, and so they would stop being the gatekeepers of like deciding which transactions get included or not. And so yeah, I don't know, it's obviously hasn't happened yet, no one's officially signed on, but they're just committing to like exploring this and like kind of giving up this power and just moving more towards decentralization, which I think is pretty cool.
That is pretty cool.
Yeah.
Cool. I learned something.
There you go.
This is a long show. We got a lot more to talk
I
about
know.
still. Okay, we've had major progress on the Clarity Act. So on Monday, Senate Banking Committee, they released a 309-page draft, and they announced that they would be doing a vote on Thursday, which was yesterday. And then on Wednesday, Brian Armstrong, who's the Coinbase CEO, he posted this video. I'm gonna try to play it live. It's just like a minute long, so it's okay. So we're gonna watch it together.
Hey everyone, Brian Armstrong here. I'm back in the Senate office building in DC in anticipation of crypto market structure legislation going to markup on Thursday, which would be a historic moment, and the energy here is just palpable. So first off, just want to say a big thank you to the Senate and of course their staff, who have been putting in countless hours to get this bill to a good place. I don't think it's ever been in a more strong position and more bipartisan position. And I also want to thank the 3.7 million Stand With Crypto advocates who have made their voices heard to get this legislation to where it is today. Now, there were a number of open issues that have now made incredible progress. Stablecoin rewards was a big one. I think there was a healthy compromise there, brokered by Senators Tillis and also Brooks. And it was a good compromise because both sides left a little bit unhappy, but at least we got to a place that we can all live with. And then, of course, the other issues which I mentioned in my ex-post back in January that were problematic in the prior draft, things like DeFi and tokenized equities and CFTC authority, these have all been improved and fixed from our point of view. And so the bill is stronger than ever. It's bipartisan. It's ready to go to markup. And I'm incredibly bullish on what this could mean for American innovation and ordinary Americans benefiting from this technology. So we'll keep you updated and keep fighting the good fight. Thanks.
Good stuff. So so that was an update from Brian, and that was on Wednesday. And then on Thursday, which was yesterday, the Senate Banking Committee approved the Clarity Act. So it is now advanced out of committee with a bipartisan vote, and it is now going to go to the Senate for a vote. So it doesn't mean that it's like passed fully, but it's like it's pretty close. And a lot of major companies have come out in support of the bill already. Coinbase, obviously, Circle, Fidelity, Ripple, Kraken, A16Z, Galaxy Digital, Paxos, Consensus, over 100 different groups. So it does seem, though, like the banks largely won on kind of the main, source of contention, which was like stablecoin yield.
Yeah.
The language basically bars crypto firms from issuing rewards for stablecoin balances that are, the quote is, economically or functionally equivalent to interest-bearing bank deposits. So you can't just earn interest, I guess, by like holding on these platforms. We'll see if there's some workarounds for that, but that sounds like, a bit of a loss there, but in turn, we get a lot more clarity on everything else. So it's still kind of a win.
Yeah. We had number one op, Elizabeth Warren. I think she filed over 40 amendments just on her own. But anyway, good to see it pass. Good to see some bipartisan support on it. And I'm sure it will get signed. Again, I keep getting not rage baited, clickbaited on X, being like, Clarity Act signed. And it's not.
Yeah. What's the poly market on it? I wonder. It must have gone up by now. A 68% chance right now on poly market.
Pretty good.
Pretty good. The other day, let's see. Yeah, it used to be at like below 50. Now it's above 50. So
nice.
That's good. Yeah, so we're getting closer. That's pretty big news with it getting through the banking committee. Yeah. So
for sure.
Good news there. I saw this news also. I think this was maybe last week, but trading firm Jane Street, they revealed selling 78% of their MSTR and BTC holdings since April. Looks to be over $1 billion of sell pressure for these ETFs since March 31st. They reduced their MSTR holdings by $119 million, along with over $1 billion of sell pressure from IBIT and FBTC, which is Fidelity's Bitcoin ETF. So trading firm Jane Street is selling, and I don't know, despite this, like, I feel like since March, like since the beginning of April, Bitcoin just seems like still pretty flat to me, or maybe even like a little bit up. So it doesn't seem like it's impacted the price too much, but that's a pretty big chunk, almost 80% of their holdings.
Huge. All right, let's get back to the Stacks ecosystem. We have some quick headlines to close us out. But yeah, Zest is announcing their TGE. Pretty exciting stuff.
Huge news. Yeah, they posted a checker this morning to connect your wallet and see your potential allocation. Make sure that you're using official sources for this. Don't go connecting your wallet to random things. But yeah, you can just go there and it'll tell you like what your potential allocation would be. Just go check their website for more info. But yeah, congrats to the Zest team on TGE. Zest tokens coming soon. Very cool.
Pretty cool. Very cool.
Charles Schwab, we talked about this, I think, a few weeks ago. Their Schwab crypto accounts have begun rolling out for their retail users. So they're not available to everybody yet, but they've started rolling out. So if you are a Schwab client, you can now trade Bitcoin and Ethereum alongside stocks on their platform. It looks like they're doing this in partnership with Paxos. The main thing, though, is that they do not allow external crypto transfers. If you buy it on their platform, it is stuck on there, but they do say that they're working on it. Wouldn't hold your breath. Who knows how long that'll take. So buyer beware, I guess, but you can at least get native crypto exposure in your Schwab account, which is still pretty cool.
Sweet. This one I thought was funny. Too good not to include. Infamous rapper Drake.
I missed this completely. This is hilarious.
So he dropped a new song called Dust. I don't know when he dropped it, but it's very recent. And in the song, he calls out SBF, like Sam Bankman-Fried, and Bitcoin. So the lyrics
are... rap for us, Kate?
Oh, I will read the lyrics though. So his SBF call out, he says, an FTX penthouse high riser. Yeah, Samuel Bankman. Free all my guys up, yeah. And then later in the song, he drops a beat where he says he's a BTC crypto big timer.
Wow.
But yeah, we should have played the song. I'm certainly not gonna rap it, but I thought it was just funny. Yeah.
So Drake wants SBF to be freed? Free up all my guys? Free all my guys up?
Free all my guys up.
Pardon SBF?
Pardon SBF.
I'm not signing that.
No.
He can stay in prison, that's fine.
Pretty funny.
He set back our industry. like 4 years at least.
Yeah, like actually crazy.
Okay. Well, that's my homework is I got to go listen to that song over the weekend.
Please do.
And give my thoughts.
Yeah.
Yeah, big week. Lots to talk about next week, too. We're actually going to be sitting down with Jacob from Hermetica next week to talk about their integration of STRC into their HBTC and USDH products. So subscribe to the show so you don't miss that one. I think we'll be doing like a special bonus episode on top of our regular, like, Friday recaps that we do. So thank you everybody for tuning in. Long show today. Lots of good stuff. Check out all of our previous episodes at goodforbitcoin.com, where we stream live every Friday at 2 p.m. Eastern. Have a good weekend. Kate, have a good weekend. Enjoy the rest of your time down there. And
thank you.
We will see you all next week.
Awesome. See you guys.